Thanks, Justin. Morning, everyone. And thanks, Justin and the MediaTel team for putting on such a great event in what I call a little bit of a greater venue than where it was previously, but thank you. The challenge of marketing and advertising continues to be revolving around the question of how many people am I reaching, how often am I reaching them, and how efficient and effective is it? And as marketers and media owners alike brace themselves for a position of strong growth in the Canadian market, we start to ask that same question today, and it doesn't change. Today, I'll touch on a few key takeaways around the real ad numbers, the real numbers around ad spending. We'll take a look at some of the AVOD platforms, and we'll also look at some of the critical indicators as we start to navigate through a period of change through economic uncertainty. First, a little bit of a background on SMI. Standard Media Index is a global trusted source in advertising expenditure and pricing. And in 5 particular markets, including the Canadian market, we have a high coverage of national brand ad spend. How do we do that? In the Canadian market, we partner with the world's leading media agencies, including the logos on this slide. And we're capturing $6 billion in annual transacted spend directly from the agencies. So we can't imagine a future of TV without first understanding the present state. We start with linear TV, where you watch scheduled programming over a broadcast and typically through a cable subscription. You can watch conventional TV, special TV channels, and you can watch live and recorded TV. According to Think TV, linear TV accounts for reaching 87% of Canadians on an average week, and for many of us in this room, watching 13 hours of TV weekly. Then you have digital video, the other piece of the pie. And through digital video, you can watch a slew of content through a number of different devices, including the connected TV. The types of content you can view include over-the-top and online video, OTT and OLV. And what at SMI we define as typically OTT as longer form, studio-produced quality episodic content, and online video, specifically more shorter form, shorter clips, user-generated content. And then in the middle of all of this, we have ad-supported video on demand, AVOD. You have free ad-supported TV, broadcaster video on demand, and then most notably, a new tier that continues to grow from subscription video on demand services that we'll hear about from Dave Morgan at Simul Media in a little bit. So we start to see that there is this new influx of ad supply starting to tilt the scales in this video ecosystem. And then you've got a bunch of other acronyms and jargon that fill the rest of this complex ecosystem. This is the holistic video universe today. And if you were at the breakfast briefing this morning, this is where we start to, today, bring together those ecosystems of video all together into the one line as opposed to the 2 lines. Today, I'll unpack some of the takeaways around ad spending, around critical factors when we're thinking about the recession, and looking at some of the real numbers behind the AVOD platforms in Canada. So first, with the video universe. When we fast forward to today on the right-hand side in 2022, we're seeing that linear TV accounts for 72% of the video investment in total. That is a massive amount, and Think TV estimates that to be over $2.5 billion annually in Canada. It is still the overwhelming majority. Now, we look back 6 years ago, and we see that 94 or rounded to 95% of the spending was with linear TV. So not surprisingly, there's been a 23 point share drop with linear TV at the expense of digital video, OLV and OTT. Today, OLV and OTT account for 28% of the video spending. And if we were to add a third bar onto this chart in 2023, I suspect that we will start to see digital video continue to grow that share probably to the mid 30%. Another thing here is that as we start to see VAM take shape in our market, we will get a better understanding of how audiences interact across multiple screens and multiple platforms. So let's dig into the digital video hemisphere for a little bit on the next two slides. When we look at breaking out OLV and OTT, the overwhelming majority of digital video is in online video. On the left-hand side, you could see, if you focus on the purple bar, there's an 81% growth, double-digit growth versus 2020 for OLV, and then on OTT, a 39% growth. So pretty significant, and that was accelerated by the pandemic. Another thing to note here is that in the last couple of years, we've seen an acceleration in online video driven by social video. So think TikTok and Snap. 1 in every $4 in online video are driven by those types of platforms. And that growth, that double-digit growth for online video and OTT continues into the forecasted future, up 20% next year for OLV and up 11% for OTT next year. One interesting thing that we have the privilege of seeing with the US data is a comparison. If we were to replicate this chart, in the US, the OTT line and the OLV line are actually at par. The volume of investment is the same in the US for the last 2 years, again, accelerated by the pandemic. So one thing that will be very interesting to see is if we look 2-3 years down the road from this chart, we will probably start to see a convergence in the two lines of OTT and OLV in Canada, most notably because of the growth in OTT that is yet to come. And I would be remiss if I didn't mention the connected TV investment in Canada. First, when we look at the 6-year trend and ending in 2021, the full year shows $46.5 million going to connected TV. The top bar is only the first half for this year. If we were to just simply double that, you're seeing a 135% growth versus 2021. Triple-digit growth year over year over year for the last 6 years. Connected TV is an area that eMarketer estimates will surpass $1 billion in 2023 and account for 1 in 5 digital dollars. When we look at some of the media owners that are capturing that connected TV spend, we're reminded that they're not just the streaming devices directly, they're actually the buying platforms in Google, Samsung DSP, and Roku's OneView platform, which I'm sure we'll hear a little bit more about later today. So now we've covered the video universe, and the last 12 months have been anything but consistent when it comes to advertising spending across categories. You've got supply chain issues wreaking havoc on certain industries. You've got some industries that are, advertising beyond pre-pandemic levels. And finally, you have video audience behavior changes happening in the last 12 months that are influencing the advertising messages coming from these categories. So I'm going to start off with this section with a question out to the audience, and please shout it out. These are the 12 advertising categories that we report on at SMI. My question to you is, of the 12, how many categories do you think grew their total ad spending year after year after year over the last 5 years? And it's over the same time period of first half. Shout it out. How many of the 12? Is it 2, 10, 11, 9, 0, 12? Well, the answer is 8, and that actually did surprise me. The majority of the 12 categories increased their spend. And in fact, retail and travel services were right on the cusp. They just were shy of one previous year for both respectively. So let's take a look at those 12 categories and think about their spending in the video ecosystem. What we're seeing here is 4 quadrants. And what we're charting is the categories and their video advertising spending. If they spent more on linear TV, they're on the right-hand side of the x-axis. And if they've spent more on digital video in the last year, they're on the upper quadrants on the y-axis. You have 7 categories that are growing both their spend on the top right quadrant. You have 1 category in each of growing linear TV and growing digital video, And then on the bottom left are categories that are cutting both. They're perhaps going through some challenges in their industries that are forcing them and putting pressures on their advertising spend, specifically in video. And what I've done here is I've properly put those labels in the 4 quadrants that they stay in. There are 7 on the top right, most notably travel services and entertainment and media, which were growing significantly on both. And then on the bottom left, we have 3 categories of automotive, wellness, and pharma. Most notably, automotive declining over 30% year over year on both digital video and linear TV. And this is where I think that there is an opportunity for Canadian suppliers and media owners in particular, and especially actually the ones that have both digital video assets and linear TV assets. They have the opportunity to offset one using the other. So for example, of technology and incrementality and trying to show how do we build upon your reach goals by adding more digital video. There's that opportunity that digital video pure play publishers don't necessarily have and probably need to resort to more pricing discounts in order to shift advertising spend. And then the last one here around more granular subcategories, we're showing from left to right some of the largest category or subcategories that are driving their video spending across both linear and digital video. I'm going to highlight 4 in particular here that all belong to the financial services category, most notably credit cards growing their spend 818% year over year on, and driven by linear TV. So we're going through a little bit of a period of economic uncertainty. And no, linear TV is not going up in flames. But when we're looking at challenging times and pressure, we're definitely starting to see that the marketing budgets and some of the dollars that are evaluated most often attribute back to linear TV. Supply chain challenges, as I mentioned, are causing some pressures. We also see that brand advertisers are moving from branding campaigns to activation. And then also, finally, share of voice is being forsaken in the interest of cutting costs. So let's look at some of the numbers. To answer one of the big questions around inflation, yes, we are seeing inflation on linear TV. CPMs are increasing 16% on conventional and 12% on specialty. When we look at the different day parts, Fringe averages a 20% CPM increase, and then in terms of Prime, it's a different behavior between conventional and specialty, flat for specialty and up 13%. I would add for the buy-side marketers in the room that this is a point of benchmarking and trying to look at understanding the growth in linear TV and the value that that brings you and using it as a benchmark when looking at your campaigns. And finally, my last thought here, I wanted to dig a little bit deeper into the video ecosystem with the 3 columns on the left representing digital video. Social video averaging a CPM of $6, flat relatively over the last 2 years. Move over to the second column, we have online video CPMs averaging $17 and flat versus last year, down 8% versus the year before. And then the third column, where I see a lot more of the premium content, the OTT delivery. You have FAST, you have BVOD included in there, a lot of connected TV, CPMs averaging $25, flat versus last year, down 10% versus 2020. And this is not an apples to apples comparison, but when we look at linear TV and look at it on its own and say paid spots for persons 25 to 54, we're seeing an increase of 6% versus last year and 17% versus the year before. So I challenge you to look at this in which respective side that you sit on in the advertising equation and think about the next year. Will we start to see digital CPMs inflate and creep up to the same levels of linear TV? Or do we think that the influx in supply of ad inventory in the video ecosystem keep it at bay? And then on the right-hand side for linear TV, will we continue to see this growth, inflation, or will we start to see that come back down year over year as we navigate through the next couple of years? So I know we want to give back some time on the agenda. I have 3 key takeaways. Really quickly, I'll build them out. We saw double-digit growth on OLV, OTT, triple-digit growth on connected TV, but 72%, the overwhelming majority in Canada, is still with linear TV. We analyzed some 12 categories, and 7 of them grew both their linear TV spend and digital video spend versus the last year, most notably from travel and entertainment and media. And then finally, we looked at some indicators around inflation and the recession and economic uncertainty, and how establishing pricing and the value around video is paramount today. Thank you very much. I look forward to connecting with you during the networking session and look forward to the rest of the agenda.